Kia ora. Welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news the Americans seem to be making a concerted effort to adopt a stagflation policy. The US dollar is falling towards a 3-year low. Gold is rising again, as are US benchmark interest rates. But first, a week ahead will feature central bank rate decisions from Canada, where we expect a hold at 2.75%, the ECB, where is expected a 25 basis points cut to 2.15%, and India, another 25 basis points cut to 5.75%. And the week will end with the US non-farm payrolls report, where 130,000 extra jobs are expected in extending the ho-hum trend. But the week will be dominated by factory and service sector PMIs, closely watched for the consequences of trade war activity. More damage came from the US over the weekend, with a doubling of steel tariffs from 25% to 50%. These are certain to make the US steel industry even less competitive globally, embedding higher producer costs for American factories and higher prices for its consumers. We can see that from the latest ISM factory PMI for May, where a small contraction is now taking place and the cost pressures are still very high. The final S&P Market May factory PMI recorded the most cost pressure since 2022, but a tiny expansion in this one. And China released its official PMIs over the weekend, with the factory version contracting much less and their services little changed in a tiny expansion. Inflation pressures aren't evident here. The US trade pressures may be preventing China's economy from growing much, but it isn't pushing it into contraction. And so far, Beijing has resisted Trump's request for a phone call with President Xi. And there were May PMIs out for Japan, contracting less, Canada, holding a sharp contraction, Taiwan, contracting less, Korea, a small contraction but stable, Singapore, stable but a small contraction, and Australia, stable but expanding a bit less. So this set isn't yet showing much change. But the trade war does seem to be embedding stagnation. Inflation doesn't seem to be much of a problem here. It is only the US that is getting them both. Stagnation without inflation does allow central banks to try a rate cut remedy, a remedy not available to the Americans. In China, they are applying both monetary, lower rates, and fiscal policies, more spending, to stabilise their situation. Beijing is spending big to counter the downward pressure on its economy. As a result, the country's broad fiscal deficit expanded at its quickest clip since 2023 in the first 4 months of 2025, reaching a 2.7 trillion yuan deficit in the period, almost 60% more than the same period in 2024. They need all that because it is pretty clear their real estate sector slump isn't anywhere near over yet, despite all the official help for it. And we should also note that it is a holiday in China today for Dragon Boat Festival. India reported its first quarter 2025 GDP outcomes, claiming a heady expansion of 7.4% from a year earlier, far better than the 6.7% expected and the 6.4% expansion in the fourth quarter of 2024. This expansion was led by both the construction sector and consumer spending. And Canada also reported an expanding economy in the first quarter of 2025, gaining 0.5% in the quarter to be 2.2% higher for the year. Both these indicators of economic activity are better than analysts had expected. Of course, these are only of historical interest now because they predate the tariff war actions of the US that started in April. Back in the US, the final University of Michigan Consumer Sentiment Survey recovered in its early month drop in the second half of the month, ending similar to the April level. The pause in the tariff war and the hope this would ease inflation pressures during the survey period was said to be behind the mood change. Still, this level is very pessimistic, 24% lower than year-ago levels. In Australia, job ad growth has turned into a decline, with the number of job ads dropping 1.2% in May from April, when they fell a downward revised 0.3%. Year on year, they're down 5.7%, although they remain 14% higher than pre-pandemic levels. The US Treasury 10-year yield is now at 4.46% and up 6 basis points from Friday, And the price of gold will start today at $3,375 an ounce. That's up $86 from yesterday. Oil prices are up $2 from yesterday at just under $63 a barrel in the US, while the international Brent price is just under $65 a barrel. And the Kiwi dollar is now at 60.2 US cents, a 50 basis points rise from yesterday at this time. Against the Aussie, we're up 20 basis points at just on 92.9 Australian cents. Against the euro, we're up 10 basis points at 52.7 euro cents. That all means our trade-weighted index starts today at just on 68.2 and up 30 basis points from yesterday. And the Bitcoin price starts today at $104,272 and down 0.9% from yesterday. Volatility over the past 24 hours has remained modest at just on plus or minus 1%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.